GOPIO as such is an organization which takes up issues of interest to the larger community. It was started in 1989, almost 31 years. We have 100 chapters in 35 countries, and GOPIO Connecticut is one of them, which is one of the most active chapter. And we do have several programs, including interaction with political leaders. We also have many seminars which are of interest to the larger community. So at this point, may I request our president, GOPIO Connecticut President Ashok Nichani, to say a few words of welcome. Ashokji.
Good evening, distinguished speakers, ladies and gentlemen. On behalf of GOPIO Connecticut, I welcome you to this interactive webinar of Tax Planning 2020, Financial and Estate Planning, Trust Options and Retirement Plans. For the last 8 years, GOPIO Connecticut has organized the yearly tax seminar with Cecil and other speakers. Because of coronavirus, we had no choice but to organize virtually. Thank you all for joining us. I also want you to mark your calendar for our chapter's holiday party 2 weeks from now on Friday, December 18th at 7:30 p.m. on Zoom. Thank you, and back to you, Thomas.
So we're going to start the program right now, and I also want to recognize some of our GOPIO Connecticut officials as well as GOPIO international officials. We have our Vice President, Prasad Chindalapudi. You can wave your hand, Prasad. And then we have our Secretary, Ravi Dingra, and then our board member, Secretary Raj Mishra, and then board member Ravi Dingra, and Joe Simon, he's a trustee. And we also have our GOPIO International Treasurer, Keval Kanda, and our GOPIO International Coordinator for North America, Harbachan Singh. If I see others, I will introduce later, but thank you all for coming. So we start the program with the first speaker. The format is that we have 4 speaker slots. As you have seen in the program, in one of the speaker slot there will be 2 people. So the speaker is going to speak for 15 minutes, and then we will compile the question which Prasad, I requested him to help in that. He will take up the questions from you. You can put it in the chat room for 5 minutes, and then we go to the next speaker. So it's my great pleasure to introduce to you our first speaker, Cecil Nazareth. He is a CPA. He is a partner with Nazareth CAs and CPAs. Cecil worked at Ernst & Young and the AI CPA in key strategic positions. Cecil is an Indian chartered accountant and a US CPA. Cecil is a leading authority on Indo-US tax issues. Cecil has an MBA in finance from Fordham University and information technology degree from Columbia University. He is also an author of International Tax and Compliance Handbook with special emphasis on India and US taxes. Cecil, all yours.
Thank you very much, Thomas, and welcome everyone. And I'll do my best to cover tax law in 15 minutes. I've never done it before. We can always, this is the first time. So I wrote a good book on international tax. So if you don't get sleep at night, always good to pick up a book and read. If that doesn't put you to sleep, nothing will. Okay, so good book. You can go to my website, the first book on India-US taxes. So it gives you a little guidance and framework, and more importantly, it'll keep you out of jail. Right? Disclaimer, this is for educational purposes. You have to consult your local attorney or CPA. And you have good attorneys coming after me, so you can direct all your questions to them. I'm happy to take those easy ones, right? So let's talk about 3 or 4 things. IRS enforcement, the Biden proposed plan. We talk about year-end tax planning and other proposals and some planning tools. I will also make all the slides available through Thomas so we can send it out to all the participants. So in the interest of time, I'll just cover about 10, 15 slides so that you can just get a flavor of what's going on in the tax world and how to plan and save money before December 31st. right? IRS enforcement. I'm on the Global Tax Policy Committee for the United States, and it's a really challenging committee because we give feedback to the IRS. IRS commissioner and I have done seminars together. His name is Chuck Reddick, an amazing guy, the first commissioner to be a practitioner, and he really understands stuff. In fact, like Thomas mentioned, I used to consult with him on FBAR-related topics. An amazing attorney, one of the best in the country. So he really knows practical issues about tax compliance. If you owe more than $50,000 to the IRS, be careful. Your passport can be revoked. People don't know that. So, Indians are pretty smart. They say, let's owe just $49,990. Okay, so you don't want to take a chance, my friends. You just don't want to owe the IRS if you can avoid that. Right? You might go to the airport and realize your passport has been revoked, okay, for this reason. So 5471 PFIC, I'm going to talk a little later, some major tax forms that you might omit or your CPA will omit and you'll be in trouble. Okay, non-filers, IRS is really going after non-filers. If you don't file, it's going to be problems. Unreported income. Now the credit card companies send a report to the IRS telling them what income you made on credit cards. So there's an automatic tracking. Documents to support tax returns. It's always good practice. I know some we come across when they give you some numbers, but you need documentation to support. Passive losses, little more scrutiny, and finally PPP loans and lots of frauds take place there. You want to be very careful. This is money received from the government that you are using it appropriately. Patel Brothers, Costco, not deductible, folks. That is a definite giveaway, so just be careful. Real estate professionals need documentation. People try to claim losses, but it's not allowed if you are not an active real estate professional. In other words, you spend more than 750 hours in real estate. Do not commingle funds, business and personal, always a dangerous thing because then you open yourself up to a lot of can of worms. And earned income credits are major due diligence, but most Indians are on the top level bracket, so they don't claim earned income credits. False misleading returns, major penalties, both on the preparer and on the taxpayer. Okay, payroll taxes, employee versus contractor. There was a major case for Uber and Lyft, but the California stated that they are contractors for now. But in other situations, there could be a timesheet could give away, say, hey, this person is tracking his time and this timesheet, or how does it link to a contractor? So that relationship, there are 6 or 7 and 14 elements that discuss contractor versus employee. Business expenses not substantiated and aggressive tax positions. Be careful, folks. The IRS is spending a lot of money on non-related. If you file a return, it's not as difficult, but if you don't, it's going to be challenges. So here are a few forms that you might never have seen, not be aware of, and I really want to alert you to. So 5471, if you are a US citizen and you own some interest in a foreign entity, 10% or more in an Indian company, and you're a director, you don't file this form, there's a $10,000 penalty for each year that you don't file. Now the reverse is true, 5472, when you have a foreign person owns 25% of a US company, and you don't file this form, $25,000 penalty, and they have gotten very strict on the first two. Right? The certificate of residency, I'll skip, that is just for foreign tax credits. PFIC, if you invest in mutual funds in India, then you fall under what is called PFIC, Passive Foreign Investment Company, and you pay the highest rate of tax. Compliance has been very low, but I see them coming up and ramping this area up. Gifts, if you receive a gift, estate, or inheritance from a non-resident, then you have to file this form 3520. If you don't, penalties are pretty steep. And the other two I'll just skip. 80 to 88 is for non-residents owning U.S. property. I think this audience is more the other way around, U.S. citizens owning foreign property. FBAR, not gone away, so please keep that at the back of your mind. So now let me talk about a few proposals. Now, when I use the word proposals, this is campaign proposals, so it is a far way from actually being executed, okay? So there's a chance of lower tax cuts, but I don't see any tax hikes because in COVID times, there's no way they'll put a tax hike that will just cramp the economy, right? New credit for people, long-term care. I think this is going to pass. That is my gut because a lot of people are taking care of older people, and there's no such credit now, but I can very well see you have childcare credit, but no elderly credit. I see that as coming. Incentives to offer more people to retirement accounts. They want to push more people into the retirement savings accounts. Now, apply for PPP loan forgiveness. This is important. Start today. Don't wait for the rush to take place, because that's when you'll have problems. So I told all my clients, if you have a loan, let's go for it, apply, because it takes 60 days to turn around minimum. So you need 3 forms. You need the bank form of forgiveness. You need 3508 from the SBA, and then you need your payroll documentation to support that. Expenses are not deductible. Please note, if your loan is forgiven, then it's double dipping. So the IRS is very clear. If you get the loan forgiven, then you cannot also deduct the expenses. Here are the proposals that Biden has. I just summarized, and I have the whole slide deck, so I'm going to push it out to you. There's the highlights. So greater than this, they're going to raise taxes on people above 400,000. Rates could go up from 37 to 39, but this is all, I think, 2021, if at all. Reverse some of the TCJA tax cuts. Itemized deduction, they want to cap at 21%. FICA taxes might go up to, there might be some donut hole. That's another topic. We won't get there. But capital gains, I can very well see going up in the long term. So be careful. You might want to execute your capital gains now. This one is a high probability now of taking place. Child care credit right now is 2,000. I see it going to 8,000. First-time home buyers, 15. Energy credits is going to, this new administration will focus on energy, high probability. Manufacturing, they're taking a credit. New market credits. These are all new items that I feel there's a strong probability of getting some of these through. Right? Estate exemptions might come down to 2,000 levels, but I'll leave it for my attorney friends who are coming up next. They know more than I do. So year-end tax planning. So I just throw out 10 items that I would work with right now. Accelerate expense, defer income. So always you want to increase all your expenses in December, but if you get checks towards the end, you want to defer it to Jan. Pass-through entity, if you're a small business, you get a 20% deduction, great deduction. Don't try to avail of that, provided your income is below 400,000. Business auto, great deduction, including equipment. If you have that, you get 10,000 depreciation, 16,000, 19,000. So major deduction there. The next major one I'll talk FBAR is retirement accounts. And there again, we have Andy and Michael coming up after me. They'll do a great job on that. A lot of our clients have spoken to them, and they're just phenomenal in this area. SEP plans, you can still create a SEP plan, but it has to be done before December 31st, my friends. You can fund it as late as September, but it has to be started right now. Sell stock of 3,000, you get a loss, flexible spending accounts, HSA. Now here's another good one. We have a SALT limitation, so state and local taxes deduction. So we would pay it on the corporate level, Connecticut and New Jersey. If you have a corporation, pay that tax on the corporate level, and you'll get a bigger gain. So it's a workaround from the SALT. And charitable contributions, folks, be generous. We are very fortunate to be living in this country. I am eternally grateful, and I have stepped up my contributions because a lot of it is deductible this year. Right, continuing on that vein, I spoke about retirement plans. So if you have high income, the defined benefit plan is your best bet. Okay, then IRA has got to be funded. Tuition expenses, these are other credits. Then you can also give to kids and grandkids. Like a Chet account in Connecticut is really good for states. You can use that to reduce your Connecticut taxable income. And then finally, foreign tax credits. This is a very important thing most people forget. It's called 988 foreign exchange losses. Now, here's an example. When you invest in India and the rupee depreciates, say you invested 100,000 in India in 2010, and then it was in a CD, but the rupee has depreciated so much that it's a loss, that when you're bringing the money back, it's a loss. So you can actually claim that as a short-term loss, but most people don't know how to do that. And it's not a capital gain loss, it's a short-term loss, so you can write off against the other income, big deduction. I won't go through each item. Fair to say that there's no double taxation. If you pay tax in India, you get credit for the tax you paid in the US. The only difference on the state level, you don't have such deduction. You can deduct some of the foreign taxes in some states, but no one-to-one credit. Optimum tax, people ask me, what's your best structure? I think you should revisit this. What it is C corporations, they pay double tax at 21% at the corporate level. And then at the individual level, they pay tax when dividend is distributed. But the good news, you can carry forward your net operating loss. You know, that's a really good feature of a C corporation. US is very competitive with a 21% rate. S corporations will be taxed individually at one rate. Partnerships is a flow through 20%. And then finally, you always have state tax in addition. So that is my presentation for today. I have lots more slides like you'll see here, but I'm not going to go further because in the interest of time, Thomas, I turn it back to you and Prasad to any questions I will answer.
Yeah, thank you, Cecil. It's good that you kept your time. I have Prasad is going to compile all the questions and ask you, but I have a question for you. Is the itemized deduction likely to come back? And second thing, when the COVID period started, when the first stimulus check came, they gave a lot of money to small businesses. Do people have to pay that money sometimes? If you can answer these two.
First one, the itemized deduction, no change. The Senate, we will not get back the state and local in this round. That's for sure. So our SALT limitation will still remain. 10,000 still remains for the next couple of years. I don't see that changing. Mm-hmm. Okay. On the check you mentioned, there are two types of stimulus check. If you got the $1,200, that is not taxable, but you're talking about PPP loans, I assume?
Yes, to the small companies.
Yes, PPP loans, there are two sides. It's a loan or a forgiveness, right? So if you go and apply for forgiveness, they'll give you you applied for a 20,000 loan and you got forgiven, so then you cannot deduct the expenses because otherwise it's double dipping. So that is one situation. And the second is, it is taxable income indirectly. So that's what they say, it is taxable income. So I hope I answered your question. Is it
that's
any...
Fine. Prasad, go ahead.
Thank you, Cecil. Participants, if you have any questions, please post it on our chat group. Cecil, I have a question for you that came up through one of our participant.
Sure.
It's a long question. I'll just try to read it. Okay. The conversation, the tax credit deductions, and also art donation. What is safely X times deduction one can take without raising unnecessary flags? I understand we can take up to 50% of AGI during 2020. Will this program continue under Biden era?
Okay, two answers to that question. The first part is you have to really look the facts and circumstances. Our donation goes into a special category of charitable contributions, item one. And the second item that you want to bear in mind is I am not sure about the Biden era because he hasn't started yet, right? So it's a very difficult situation because all tax law goes through Congress. And though they might have some suggestions, right, I don't know how far that'll go through. So maybe a better question at the end of 6 months from now when you get a little more traction and then you figure out who's the Senate. Even today, I don't know who the Senate will be. Is it going to be 50-50 or 52-48, right? I don't know. And until you know that, all proposals are proposals. Short in the talk.
Okay, thank you. And I don't see any other questions that came up. But I have a basic question
Good.
What do we... I know you passed through all your stuff so fast. So how the people has to be reacting right now in the next 3 weeks to file the taxes of 2020 in January or February. So what kind of actions that we need to take right now on a quick things like, and if you have some 1, 2, 3, what would be that ABC?
Okay, PPP loans, go for it. That is item one. Item two, all expenses, take all expenses as you can. This year is going to be a major loss for everyone. Very few companies will have profits, correct? So if you're a C corporation, you could use these losses and carry forward. But if you're an S, you have to flow it through. And if you have no other income, you're out. So this is why tax planning becomes so critical, right? So in a situation when you're in a major loss, the airlines, the hotels, all these people are losses. Now, if you're an S, you're out. But if you're a C, you can carry these losses forward for 20 years or unlimited until such time as you use the losses. So planning becomes critical. You have a half-baked CPA, you cannot survive. You really need someone who understands tax law. And that would have been a major change. I recommended my clients, you do a C Corp, correct? Because all these losses from this year carries forward. 5 years are indefinite, right? That would be a take. And the last thing I'll say, defer some income if you can to the next year. But the equipment is a major deduction. So you get $1 million worth of deduction under Section 179. Huge deduction. That would be my top three. And then finally, charitable. Folks, be as charitable as you can. I have been blessed, and I don't mean to preach on this call, but I have been beyond my wildest dreams. I have tripled my contributions for this year because I consider myself one of the lucky few. And when I see Feed America, when I see a line for people for a meal, then that breaks my heart, and I cannot sit idly. Last sentence I'll mention John F. Kennedy, a lot more is expected from those who have been given a lot. And I follow that rule as I go along.
Thank you, Cecil. And you, whatever the 1, 2, 3 that you said are for the corporation, I know that there are so many individuals here. What would be your tax recommendations for the individuals? The same 1, 2, 3.
Yeah, the same, but most run through the business. So for an individual, if you get a W-2, the planning is very limited, right? But I would say retirement plans are going to be huge. So if you have a business, you can create a retirement plan in the business. If you don't have a business, you're short-staffed. Now, pay your Connecticut tax. That's a huge workaround from the SALT limitation, right? We are all getting killed. I mean, in Fairfield County, your real estate taxes, $10,000 is not even a garage, right? I mean, that's horrible. So if you can pay the tax on your corporation, now, hey, you had a bypass. And Connecticut was the first state to do that. Incredible. So pay all Connecticut state taxes, and that way that's a workaround from your state and local deduction on Schedule A.
Okay.
Excellent.
Thank you.
Thank you. Thank you. Thomas, back to you.
Back to you.
Thank you.
Thank you very much.
Now we will go to the next speaker. Before that, I just want to recognize some of our other board members of GOPIO Connecticut. Our former president, Sailesh Nayak, is there. Ashwini Prasad, the board member, Santosh Gennu. I also want to recognize GOPIO International Associate Joint Secretary, Jaswant Modi, and also we have our media chair, Nami Kaur. Our GOPIO Manhattan President, Shivendra Sofat, is also here. And I also see Kerala Center President, Alas Estapan, and Hindu Temple Society, one of the very prominent community member, Dr. Uma Mysore Kraisi. Thank you, Uma, for joining. And also, I want to recognize American Society of Engineers of India past president, Srikant Agarwal. Thank you. He has joined from California. Because of COVID, we usually used to have people locally come, but because of COVID and because we had to do the Zoom, we have people from around the country joining us for this seminar.